Hello traders, Gary Wagner here. Just about 2 o'clock in Honolulu, 8 o'clock in New York. First, we do want to apologize for the late show. It was due to a computer malfunction today. Nonetheless, we had a very interesting day with the precious metals as a whole, the complex trading lower, and that was mostly based upon dollar strength. The dollar actually gained over 2% on the day, and if we look at this week alone, there's been about a 5% gain. Considering that the dollar index is now at 103, which is a high that we've not seen since the beginning of 2017, it's at a very interesting point. The question is, will the dollar break through and go to a new high, or will it find resistance in this area? We do have gold trading lower, the rest of the precious metals trading lower, and a slight recovery in the equities markets. On today's show, I want to continue the gold-silver ratio and take a look at the dollar and where it could possibly go. But first, to the price board. We are currently looking at gold futures. This is the continuous contract based on April still. 1475.20 down $4.10. What is most interesting to me in terms of the range that it played, and realize that this little green candle here represents the afternoon, what I call the afternoon session, and the one above it is the New York session. And what is interesting is look at the high of the day. The high of the day came right to the 200-day moving average, but backed off quickly. And that's sitting right at around, call it 1,500, just shy of that. So my sense is that we are looking at a market that continues to be under pressure, and because of that, we are going to stand on the sidelines. The next thing we want to look at is platinum, and platinum itself is trading well under pressure, breaking through 600 at 595.10. Palladium 1522.40. Silver currently in the low 12s, 12.15. I haven't seen that in a year now. We did get a recovery in the Dow, but only up about 188 points. The one thing that we want to look at more than anything else that has been an incredible move up is got to be the dollar index. As you can see on the left-hand side of this screen, this is a daily chart, and it shows you that over the last couple of days, out of the last 8 to 9 trading days, only one of them closed lower. And then look at this spike today. This line represents the former top at 103.72. Where it really gets fascinating is when we look at the weekly chart, and that's going to be on the right-hand side, and take a look at what we've seen over the last 2 weeks. We have seen this market move from 94 to 103. That is almost a 10% move in a time span of a week. That is one very strong dollar. Let's take a look at our technical studies. As you know, currencies do not tend to have tremendous swings or changes except in exceptional times, and that's obviously what we're looking at, because when we look at this weekly chart, we can see that it closed at this high. I'll show you where that comes in 1 second. This is 1 week with a day still to go. This is last week's trading activity, and that's when it traded to this low of about 94. Now, 94 obviously to 103 is about a 9% move in the marketplace. But traders, let's convert it to a monthly chart. And as you can see, we have done that. We are now looking at each candle representing 1 month. The last time we saw the dollar this high, it had traded to a low of about 78. That is back in this area, about 2013. A tremendous spike to the upside, actually moving from about 80. This is 80 right here. And then traded to as high as just above 100. It then retraced a little bit, going to 92, and this is the high that I'm speaking about. This is the highest trading point we have seen in the last 4 years. So the fact that we are up at this top, we can go back in time because it was once at 120, but the most recent data tells us that we could in fact find some resistance here. But if it breaks through this area, we need to look at a longer term chart. And traders, I've changed this to a 2-month candlestick chart, extremely long term, each candle representing a couple of months. And this is the area that I'm talking about in which it traded near 120 on the index. So traders, we are looking at the gold-silver ratio. It hit a record point when it hit a high a couple of days ago at 126. That's 126 ounces of silver to equal the value of 1 ounce of gold. It is the highest level on record. And then we saw today back off just a bit. It is at 121,445. Now, when we look at our different retracement points, and I'm drawing the retracement from the beginning of this rally, which was slow to start, and then in essence went parabolic over the last week and a half, we want to look at two particular levels for where it could go to. Either the 23% retracement or the 38% retracement. Because right now I think that it is most likely after hitting this high that it will back off a little bit, meaning that silver will once again outperform gold for a short period of time. When it gets to 117, if we catch a V in a candlestick, we would want to put that spread on. If it breaks through there, we are going to look at 111 as a price point to enter the gold-silver ratio. We will explain the exact mechanics throughout the week, but in essence, we're selling one item, buying another, but because of the different contract size and value, it is a little bit tricky in terms of the formula, but we will explain that in complete detail. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.